KOSPI, rally trap activated. All right, let's get straight to it. The bottom line is this. Global institutions just dumped over 1.1 trillion won into the Korean rally, using it as pure exit liquidity. This sets up a really high-risk situation for the US Open.
Now, this number right here, negative 1.1 trillion won, this is the only number you need to care about from the entire Asian session. This isn't just market noise from retail traders. Nope. This is the institutional footprint, and believe me, it is telling a completely different story than the headlines. And here's the core conflict we're dealing with. On one hand, you got the signal everyone's cheering about, the KOSPI index hitting a record high. But on the other hand, you have the capital flow, a massive exit by the big players. And let me tell you, whenever the signal and the smart money are moving in opposite directions, you are looking straight at a trap.
So, we have to break this down right now. The big question is why? Why is the public signal going one way while the serious money is sprinting for the exits? Figuring out this divergence is absolutely the key to trading the US session. This is where you see the two narratives completely split. You've got Asia looking at the simple arithmetic of it all. A US court rules to remove some tariffs, well, that means lower costs, which means higher profit margins. Simple math, right? But the US market, it's looking past the math and straight at the politics. It knows a court ruling doesn't stop a trade war. It just moves the fight to a new location. The real risk here isn't about price, it's about policy.
And that brings us to this key concept, political inertia. What does that really mean? Well, think of it like this. It's the belief that the government will just find another way to keep its policies going, even if a court puts up a roadblock. The ruling might slow things down, but it doesn't change the overall direction. The vector remains the same. That's the threat the US market is pricing in. And this just shows you this strategy perfectly. You had all this retail excitement driving up leading stocks like Samsung, and the big institutions used that excitement as the perfect cover, the perfect camouflage to sell. The data confirms it. This huge negative correlation between the KOSPI's rise and the foreign money outflow, it proves this was a calculated, strategic exit. They sold into strength that they themselves did not believe in.
So, what's the big takeaway here? It's this simple truth. The market doesn't just want temporary relief from a court. It needs finality. It needs to know for sure what the policy is going to be from the executive branch. You see, a court ruling might help the numbers for one quarter, but only a real confirmed policy shift can restore that long-term trust. Which leads us to the billion-dollar question, right? You've got Asia's optimism on one side and the smart money's fear on the other. How does this conflict finally get resolved when the bell rings in New York? Well, it's all going to be forced to a conclusion by one single event, the U.S. Durable Goods Report. This one piece of data has the power to prove one side right and the other side wrong. It's going to collapse this whole divergence into one clear, undeniable direction. Okay, these are the trigger points you need to have locked in. The market expects negative 2.5%. If that number comes in worse than negative 3.0%, well, that just proves the institutional exit was the right move, and it's going to crank up recession fears. If it beats, say, better than negative 2.0%, that could fuel the rally trap, sure, but it does absolutely nothing to get rid of that underlying political risk.
All right, mode shift. The analysis is complete. We're now moving to execution parameters. Battle plan engaged.
Listen to me on this. Do not trade the headline. You trade the supply chain. The retail rally in Korea was the headline. That 1.1 trillion won outflow, that was the signal. Follow the real flow of money.
Watch resistance. NQ 25,000 is your key pivot. If it can't reclaim and hold that level, it confirms the KOSPI high was a trap.
Your line of defense is support at NQ 24,800. If we break below that, expect broader selling pressure to kick in. Invalidate all long positions below 24,650. A break there confirms a false breakout in Asia and validates the US market's repricing of this macro risk. Your execution orders are as follows. Step 1. Entry is only authorized if NQ breaks and holds above 25,000. Step 2. Defend the zone between 25,000 and 24,800. Step 3. If 24,650 fails, you invalidate the entire long thesis. Cash is a valid position. Acknowledge.
Final checklist. Watch the pre-market volume on NQ futures. Monitor TSLA and GM for any immediate reactions to the tariff situation. If the VIX moves above 20, all plans are scrubbed.
Capital preservation becomes priority 1. Log your results. Log the result at 0630 EST, no exceptions. If you need this breakdown of the Asia close before the New York Open every single day, you know what to do. Subscribe. Be here.